Ladies and gentlemen, welcome back. You guys have posted directly to me a bunch of questions. I'll be answering them today. About 9 questions, 8 or 9 questions here about Bitcoin, about the bull market top, how to sell the bull market top, Ethereum targets, about trading as a whole, right? Strategies for trading, how to trade different time frames, about altcoin season, right? Lots of different questions on lots of different topics that you guys have posted here. I'll put some timestamps down below to show you exactly where in the video I answered each question, so you can skip the ones that you're not interested in and watch the ones that you are interested in. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content. All right, we'll keep these answers brief for the sake of simplicity and not dragging out the video too long. Which indicators or trends or behavior to watch to know the top is upon us? So how do we know that Bitcoin has topped out in a bull market? Well, we'll go off the historical data, plain and simple. Obviously, the textbook way to understand if Bitcoin is topping out or near topping out is understanding where it is in relation to its 4-year cycle estimated top. The 4-year cycle being the biggest state range trend Bitcoin has. Stemming backwards from prior to the first halving, straight up, you guys know what it is by now, obviously. I mean, if you don't, welcome to crypto, right? It's the first thing you learn about crypto, generally speaking, if you're listening to anyone who knows what they're talking about. Basically, the 4-year cycle is a date range trend. It's an accumulation of date range trends. It stems in traditional markets as well. And the 4-year cycle, just straight ahead, blanket, predicts a top around Q4 2025. So if we are in Q4 2025, specifically around October, you would know that any sign of weakness in the charts is probably indicative of what would end up being a cyclical top. If we are not in Q4 2025, you need extra means of confirmation. So the way I'm approaching it is if we are not in Q4 2025, I'd be waiting for a breakdown, a macro breakdown to validate that the top is in, rather than waiting for a top indicator to validate that the top is in. If we are in Q4, I'm waiting for a top indicator to validate that the top is in. So in terms of top indicators, we'd be looking at things like the monthly chart RSI. You can see this channel on the monthly chart RSI has marked every single top so far, cyclically speaking. So if we got up to the top of that channel, that would be a very good sign that the top is actually in, especially if it happened in Q4 2025. Another good indicator for marking the top is the Pi cycle indicator, which has marked the top on basically, all of the occasions. It's slightly missed in 2021. Albeit, but it marked the first top in 2021, if you can call it that. Now, I have some issue with calling it the first top because I don't necessarily believe it was a double top formation. Total cryptocurrency market cap went 20% higher. 4-year cycle remained intact as per a November top and followed up with a November 2022 bottom. So I wouldn't necessarily call it the first top, but for the sake of simplicity here, yeah, look, it marked a significant peak in 2021, so it's not totally invalid yet. So I would be paying attention to this, the Pi cycle to some degree. There's various other indicators we can use to mark a trend breakdown, which would validate a presumption of a top. But as for actually predicting the exact top itself, we don't really have much other than that. We have the 4-year cycle date range trend. We have the monthly chart RSI, and also the 2-week RSI. We have the Pi cycle, and that's pretty much about it. I mean, there's probably a few more things if I really scratched my memory to the last cycle that I will bring up closer to the date. But right now, I can't really think of anything else exactly. Obviously, there's channels like this, which we've discussed in prior videos, which we'll be watching closely, but that's looking at specific price targets rather than a broad macro top. Just general signs of TA weakness like descending volume and an upwards trend, like structural breakdowns from patterns around Q4. All of this would do a lot to mark the top, but that's all circumstantial. We can't really bring it up right now. Another good way to understand where a top is understanding how far into altcoin season we are and how altcoins are progressing. Obviously, if you're seeing mass greed in the altcoin market, that's probably a sign that the top is near. Here's a question about the M2 money supply in relation to Bitcoin. So what is the M2 money supply? Let's just break this down very simply, not to complicate the video too much. basically the money supply in general and what it means for financial markets and what it means for how financial markets move. So when the money supply is increasing drastically, that is very good for financial markets in general and very good for Bitcoin. Bitcoin is no different to the S&P 500. It's no different to real estate in the way it moves. Generally speaking, the correlation is very much there. Now, Satoshi, when he invented Bitcoin, he obviously intended it to be an independent asset class, and it is, but unfortunately it is still an asset class. So it's going to move very much in correlation to how asset classes move in general, unless something major happens and some sort of major catalyst pushes it completely aside. It turns into a complete alternative investment that is invested in when other things are not. And I don't even know if that's possible, to be honest. But what I do know is this. When the money supply increases, when money is printed through debt, money flows first into assets because of the fact that it is printed through debt, okay? And debt is used to buy assets. All you need to do is look at the S&P 500 chart adjusted for the money supply. Guys, this is the S&P 500 chart adjusted for the money supply. It has not been at all-time highs since the dot-com bubble in 2000. Right, this is a big difference from the S&P 500 chart you see every day where it's skyrocketing to all-time highs, it's all the way up at 5,000. No, the S&P 500 is literally at the same level it was at 2001, adjusted to the money supply. Yes, okay, it is at very big 2-decade-long highs, and it just got there recently, actually last year, but it's very low compared to where it was in 2001. It's very low compared to where it is in the regular S&P 500 chart. It just shows you the power of the money supply in relation to assets. It is pretty much everything. So if the money supply is increasing, that's going to be absolutely excellent for Bitcoin. It's going to be absolutely excellent for assets in general. And the good news is, I suppose it's a double-edged sword. It's good news for the markets. It's kind of bad news economically because obviously we don't really want, mass inflation. But it's good news for markets. The money supply should be increasing again starting this year. Quantitative easing is certainly on the horizon. We're seeing some delays there, but rates will be cut dramatically. A question from a long-time viewer of the channel here. James basically asks, if the 4-year cycle was to continue to play out, would there be a price range that you would consider shorting at? And that would depend on where we are in October, November. Again, I'm a breakout trader, and I do believe very heavily in breakout trading, meaning I do have theories on where tops could be or bottoms could be when trading, but I wait for the actual confirmation of that to occur before taking an entry. So if, for example, I thought the top would be, let's just say hypothetically, I won't be here, but let's just say hypothetically, I thought the top would be at 95,000, I would wait for a breakdown of a support line before actually taking that short, and that might occur lower. That might occur at 92,000, okay? That would be an example of breakout trading. You're just doing that on a bigger scale. So if I thought the top could be at 130K, which I do think there is a decent amount of evidence for. I made a video on this 2 days ago right here. I'm not confident in it by any means, but I do think $130,000 is a zone of interest, that's for sure. I wouldn't just go ahead and short 130K as soon as we got there. I would view 130K. I'd wait for constant rejections from that level, okay? And I'd wait for a breakdown of something like 120 or wherever the support is. And then I would short that region based on my theory that 130K is a top. But I'd wait for the confirmation to make the trade a bit more secure. So I wouldn't just be blindly shorting any price that we reach. I'd be shorting after a breakdown had occurred for confirmation, after rejections from a critical price range within the date range trend that the 4-year cycle says. That's exactly what I did in 2021. I said the top was likely to be in at around 66,000, but I didn't enter any positions until 63,000 because I was waiting for breakdowns, and that was all public. This is an interesting question that people don't really ask too often. Why is volume the same in this bull market than it was in prior bull markets? Why is volume not increasing if the price is increasing? Now, there's a few reasons for this. Number one is now there are ETFs, so a lot of volume is not actually measured by publicly tradable exchanges, so it's not really being accounted for on CoinMarketCap, so you can't really view how high the volume really is. That's one reason. But another massive reason that people probably don't consider too much is that, all of the data suggests, on-chain data suggests very, very clearly that you can view for yourself at any time that way more people are holding now. People aren't trading as much. Bitcoin is not being exchanged as much as it was back in 2021, right? People are holding. The amount of holders is perpetually increasing, okay? That's the fact. So with more holders, you have less Bitcoin available on exchanges to be publicly traded and less Bitcoin hence being traded in general. Now, you might wonder, why is the price still moving upwards if volume is the same, if not a little bit lower? And it's because price and volume are not necessarily correlated in that fashion, right? Price has a lot to do with liquidity and available supply and circulating supply rather than it does with actual volume itself. The price could literally move on a fraction of the volume that it currently has. Now, here's where it gets interesting, though, and here's where it makes a bit more sense. If you look at the total cryptocurrency volume, right, not just Bitcoin, you do see that volume is actually moving upwards quite rapidly, and you see that right now the price of the total cryptocurrency market cap, or the market cap, I should say, is at pretty much the same level as that in 2021, and the volume is pretty much the same, if not higher. So it's actually just a Bitcoin isolated thing. The Bitcoin volume being lower or close to the same as it was in 2021 might seem alarming at first, but total cryptocurrency volume is moving upwards, and we can explain away the differences there with Bitcoin versus the total, so it makes sense. Expected date for quantitative easing, just like I don't like speculating on when interest rates will be cut or what inflation will be. I literally just look at the market data because the market data is the gold standard of speculation. You'd be stupid to think you knew better than the entire market does collectively. The market as a whole, okay, is assuming that quantitative easing will begin late this year, right? Or maybe Q3, if not Q4. And that's based on so many things that go beyond what I can explain to you. That's what the market says. Forget about what I said. What I say doesn't matter. It's what the market says that matters. It knows more than me. Now, that is actually a little bit late compared to when it's previously started in relation to cycles. So it will be interesting to see if that does change anything, but we just don't know that right now. My opinion on Bitcoin versus gold as an investment in times of uncertainty, completely different assets. Now, Bitcoin is digital gold, and it's fundamentally like gold in a lot of ways. It's a lot more like gold than it is like a stock, for example, that's for sure. But in terms of technicalities of investing within them, they're completely different asset classes in the sense that Bitcoin is much more speculative than gold, and Bitcoin is also much more volatile than gold. So you're looking at these things as the same use case for investing is, I think, a little bit of a distorted view. They've got the same use case in functionality, but in terms of use case in investing senses, I don't think you're on the right path in that regard. I don't consider them to be in the same bucket at all. My answer can only hence be that it depends on what your risk tolerance is. If your risk tolerance is higher, then of course Bitcoin would be the go-to. And if your risk tolerance is lower, then of course gold would be the go-to. Now, using the word uncertainty there, if you're asking about times of uncertainty, I think you're probably implying you'd want a safer investment, in which case I would probably choose gold. But again, it depends on the period of the market cycle that you're in. If you're at the end of the 4-year cycle and Bitcoin's at its bear market low and it's bottoming out and the cycle's still intact, you might actually be in a position to say that Bitcoin is safer than gold. So it's completely contextual, and I don't like questions like that for that reason. Is laddering out of your crypto positions better than just selling the whole lot at once? Well, I do believe in dollar cost averaging to an extent, but I believe in strategic dollar cost averaging. So I'm not going to sit here and advocate for blindly buying every week when your paycheck comes in, regardless of the price. I don't think that's smart. I think that's gambling. And I think that if you're willing to risk so much of your money every single week, you should at least learn something about the charts. And if you learn something about the charts, of course, you'd know when it's best to buy then. Of course, right? If you're sitting here every single week for years on end buying at a certain end of the week, Friday at 12 p.m. and you don't care what the price is, why would you not take some of your time to at least try to learn TA and hence structure your buys a little bit more reasonably in accordance to the TA? Unless, of course, you don't believe in TA, in which case you're a fool, because TA is real. That's just a fact. So I'm a believer in strategic dollar cost averaging. What I mean by that is, well, okay, we've been consolidating for a while. Cool. I'll buy on support 20%. I'll buy 30% on the breakout. That means I'm in 50% of my total position. Maybe I'll sell 25% up here as we reach tops, a double top formation. Maybe I'll buy another 25% over here as we break out, right? Buying increments of what you overall intend to invest based on the going-ons in the charts, right? That was just an example. Of course, I didn't actually do anything I just said there, but it's just basically reacting to the charts with small incremental buys to decrease your overall total risk and also maintain coherence with what's going on in the charts as a whole, right? So you're actually reacting rather than just blindly buying, which is just gambling, essentially. And being that you're reacting, you're incrementally decreasing your risk when the favorability of the charts decreases and incrementally increasing your risk when the favorability of the charts increases. Now, if you aren't willing to learn a single thing about the charts at all, you're kind of not really on the right channel. So yes, I do believe in laddering in and laddering out. I don't think it's wrong to lump sum buy as long as you've calculated the risk-reward ratio and you deem it to be acceptable. I especially believe in laddering in and laddering out when it comes to the altcoin market in parabolic altcoin seasons, because that's when TA really goes out the window to some extent. And at some point, you just need to take profits regardless of how you're feeling emotionally, because your emotions might make you want to hold a lot longer than you should. But I also want to add a little nuance in there. I don't believe that you should be having predetermined targets when it comes to altcoins. Like, I'm going to sell at $10, I'm going to sell at $15, because that can actually hurt you more than it helps you. You can end up holding for too long and you never get to the target, and then you end up not selling anything at all, right? So having predetermined targets is a bit of a risky game as well. What I would suggest doing, and again, this is not financial advice, this is just my own strategy when it comes to altcoins, is I would suggest personally having stop losses, right? So instead of having an upside target, have a downside ripcord that you pull if you go down below that level. So that gives you room to run to the upside if there is that parabolic move, but if it does reverse fully, you've got that ripcord to pull. When day trading, can you give examples of how to use different timeframes together for confluence? I can do a very simple example. So for example, if I was taking a trade on the 1 minute chart primarily, I would also have the 5 minute chart or the 15-minute chart on my screen, and this is the 5 minute here, for example. So I'd be looking at a broader structure on the 5 minute. I'd be waiting for that broader structure to break to the upside and hence the trend to definitively flip to the upside. And then I'd be taking a long position, and then I'd be reacting to the short-term developments of the 1 minute chart with the knowledge that the 5 minute chart, the broader time frame, is in an upwards trend, and hence with the knowledge that all of the 1 minute chart time frame patterns that form or momentum structures that form would have an inherent bias to continue to the upside. So taking a broader, larger time frame and identifying the trend on that larger time frame, ideally at a point of reversal in the trend or as a point of continuation of a trend to get that fresh volume in, and then reacting to the shorter time frame, knowing that the larger time frame is favoring those shorter time frame charts. That's how you use time frames in confluence with each other. At least that's how I do. So here's a question that I can't necessarily answer to the full extent, but I can try to answer it about Bitcoin dominance. Basically, will Bitcoin dominance crash properly, and will that signal the end of the bull run, as that's how bull runs have historically ended? I do think that Bitcoin dominance will eventually go down. As to whether it will crash to a certain level or not, I don't think we can know that definitively, because Bitcoin dominance is doing things it's never really done before at this part of the cycle. Altcoins are dramatically underperforming where they have been in last cycles. Ethereum is getting wrecked in comparison to last cycles. This is due to the unique market environment that Bitcoin has formed this cycle. It's formed a market environment that is filled with long, sweeping consolidations, which is not conducive to very good altcoin performance. Altcoins pop off when there is greed in the market, when there's hype in the market, and when Bitcoin's consolidating for 5 months, 8 months on end. There's no greed or hype. It drains the hype right out of the market. So altcoins are doing badly this cycle. Now, if Bitcoin does continue this bull market and continues upwards, I do expect some degree of altcoin performance and some degree of altcoin season. But whether or not it's anything like we've seen in the last 2 cycles, I think is completely speculative. I don't know. We know for a fact that the trend that previously existed, that altcoin seasons lasted about 322 days before topping out the bull market as a whole. That trend is broken, because if altcoin season was to last 322 days, it would have had to start back here in November. But now we're sitting here on the brink of May and it hasn't even started yet. So we don't necessarily know what's going to happen with Bitcoin dominance in relation to where it's going to go. But what I do know is that the money flow cycle in cryptocurrency does still exist. When Bitcoin goes upwards dramatically in a bull market, the next place the money flows into is altcoins. So it just kind of depends what the scale of that money flow is, but the money flow will happen. So I do believe that the end of the bull market will be marked by some sort of altcoin season. As to whether it's huge like we've seen before is completely up for guessing. But yes, I do believe Bitcoin dominance will eventually go down to some extent, just don't know what extent that will be. And I do believe that we will end off the bull market with Bitcoin dominance in a downwards trend, and then reversing back into an upwards trend as the bear market kicks in, like usual. And this is all assuming the bull market's not completely destroyed to begin with, of course, which I don't think it is, but it's definitely a chance. Please check out the hash ribbons and the MACD on the weekly chart, please. Yeah, we'll do that right now. If we go to the weekly chart and we look at the hash ribbons and the MACD, we see pretty big buy signals coming in. Now, this is a big threat for the bears. The bears were looking at this quite heavily a few weeks ago. Hash ribbons, by the way, and the MACD say the same thing. So I'll just look at the MACD. We had a sell signal here on the MACD. Both times, actually, marked both of our major consolidations of the last year or so. Now we're coming in for a buy signal. All we need to do is continue upwards here, and we will see a buy signal, and we'll see another pump in the market. So it's pretty good stuff now. That bearish trigger that happened is pretty much resolving. All we need to see is a little bit of continued upside and momentum, and it will be resolved. Do I have an Ethereum top prediction? No, I certainly do not. I did have a speculation about where Ethereum could top. Wasn't a prediction by any means. I don't believe there was ever enough data to make a prediction, but I said around that $9,000 region was a region of interest. But I completely step away from that now due to what we've seen in the altcoin market. You know, unprecedented. We've never seen it before. We've never seen this amount of weakness on Ethereum and altcoins. Ethereum is not meant to be this low in relation to its all-time high at this part of the cycle. It is obscenely destroyed in comparison to where it's been historically. So I don't think we have any reason to be confident to any degree about where Ethereum could go. We had a trend forming on Ethereum. It was a 7-step or 6-step pattern. 1, 2, right? 3 was bottoming out. 4 was forming bear market resistance. 5 was breaking it. 6 was breaking all-time highs. That was forming step 1, topping out. Step 2, dead cat bounce, bottoming out number 3, forming resistance number 4, breaking that resistance number 5. We didn't see the all-time high breakout, right? So that trend that we had broke entirely, and that's what the $9,000 observation was based off. Now we have nothing. Anyone sitting here giving you an Ethereum target is basing it off of the weakest evidence possible, if it even can be considered evidence. There's no trends on Ethereum right now. They are all broken. So guys, that's the video. Thank you for watching. We have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content.